The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. And yes, they do have the Home Select product. I just did another scenario. 1.67 was the effective APR, 30-year loan. And we did show them they're going up to $2 million is the latest one that we did. It was a $2 million loan. Let's take a look. Every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. What they do is they give us the number that you put into your mortgage calculator. Yes, go to ronismylender.com and you can get a mortgage calculator right there on the app that we give you for free. 30-year conforming loans yesterday locked down 7.005. 30-year jumbo loans locked up 7.173. FHA loans down, they're pretty flat, 6.781. USDA loans down a little bit, 6.737. That's the rural areas, generally no down payment. 30-year VA loans, best loan on the market. Thank you to all of our veterans. That one was pretty flat also, 6.581. If you want our market commentary, we do put that out, our thoughts for the day, rsrmarketminute.com, rsrmarketminute.com. We send that out as early as the data will allow. Let's see what's going on this morning. The S&P 500 is down 43 points as I speak, as we record right now. We're going to look at the, for some reason, my computer is not showing it to me, so I'll go back to the other screen. 10-year Treasury. Right now, that one is at 4.362. That's down 8 basis points. Those are big moves. We don't usually see the 10-year Treasury move that big. I'll tell you why in just a second. Now it's down 9 basis points. Mortgage-backed securities, whoa, those are up 41 basis points. That means interest rates are getting significantly better. Why? Well, we're in one of those backward stages. I know a lot of things in our country right now are backward, but we're in a backward state. When things are bad, the markets do better. When things are good, the market does worse. So what does that mean? Well, retail sales came in, and retail sales for the month of April were flat, which was lower than the 0.4% increase that was expected. Additionally, last month's figure was revised slightly lower from 0.7 to 0.6. Take out autos and gas, sales actually fell 0.1%. The core retail sales, which goes into GDP, declined by 0.3%. Now, it used to be that 2 negative quarters of GDP meant that we were in a recession, but in the last couple of years, they've changed some of these guidelines. But we'll see what happens. Last month's strong 1.1% core reading was revised lower to 1%. The negative 0.3% monthly reading is the lowest since January and really coincides with what we've been saying. A lot of signs the consumer is coming under stress. Like you've maxed out your credit cards, your buy now, pay later, 43% delinquency. We can't afford to live, but the president tells us we've got a great economy. I'll go on. I don't want to get caught up on that one, right? Now, what happened also today? Well, we got the CPI report today. March Consumer Price Index report showed that overall inflation rose 0.3% for the month, which is cooler than estimates of 0.4%. Year-over-year inflation decreased from 3.5 to 3.4, in line with the expectations. Core rate, strips out food and energy, also increased by 0.3%, which was in line with estimates. Year-over-year core CPI declined from 3.8 to 3.6. But we need to look at the insides of these numbers because that's what's really important and that's what's driving the market right now, is what are the numbers really telling us? Well, the biggest part of the CPI is shelter costs. 45.4% of CPI is shelter. That would mean rent, owner's equivalent rent, lodging away from home. But the next biggest area that's impacting it is auto insurance. So we saw shelter went up by 0.4%. And we see that auto insurance went up 1.8% month over month. That's a 22.6% annual increase when you're looking at motor vehicle insurance. Now, let's do some math here because we had a core. If we get rid of all the rounding issues, our core unemployment, our core CPI, 3.62%. Shelter weighted average was 2.51, and motor vehicle, again weighted, was 0.84. So when you add those up, everything else in the entire universe, other than the roof over your head and your auto insurance, had an inflation rate of 0.27%. What do you think the Federal Reserve can do to make that any better? Nothing. But they keep talking about that. So that's where we're waiting for. They say, well, we need the inflation numbers to go down. Well, do you think your housing is going to go down while they've got high interest rates? Do you think that motor vehicle insurance is going to go down because the Federal Reserve raises or lowers interest rates? It has no bearing on insurance costs. So just take a look and watch what's going on. You're hearing all of these things first on Ron Siegel Radio. When you listen to the news tonight, heaven forbid you listen to the news on broadcast news, because you're gonna get, well, after they finish all the Trump coverage, although the court is out today, so we might get real news. But the bottom line is you're gonna hear that inflation is cooling and retail sales are cooling, but they don't tell you why, and they don't tell you what's driving these things, and why don't we get lower interest rates? Well, the mortgage market right now is telling you interest rates should be coming down, and they are. So that's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990. 800-306-1990.